This is Robert Kraft, and I'm your host on SNN.Network, and we're at Benchmark's 8th Annual Discovery Conference in New York City in 2019. With me right now is David Lachtman from Benchmark, one of the hosts of the conference. He's a managing director here at Benchmark, and we're here to do a Wall Street review to talk about the state of the cannabis market right now. David, welcome to SNN.Network.
Thank you very much.
It's great to have you. So for our audience, let's start off first with your background and a little bit about Benchmark, and then we'll go from there.
Very good. So first off, Benchmark is a 32-year-old firm, boutique investment bank, full service. We're headquartered in New York. We specialize in healthcare technology, and over the last year and a half, have begun to venture into the cannabis, hemp, and CBD space.
And what's your background real quick? How did you come to work at Benchmark?
I started out at Benchmark about 5 years ago. I started out my career in institutional equity sales, morphed into a capital markets role, and then became an investment banker.
And now you're focusing specifically on hemp CBD, you personally?
Personally, I lead the effort for the firm in the cannabis hemp CBD space. However, I do cover some of the traditional areas for the firm as well. However, being a native Californian and growing up around the cannabis industry, it just so happened that I was probably the right guy to lead the effort in the sector for us.
It piqued your interest just a little bit.
Exactly. I've been familiar with it since I was a small child. My family had 20 acres of land in the famous Emerald Triangle in Mendocino County.
All right. So last time we did a Wall Street Review covering the cannabis market, it was around June of this year, really. So let's get that state of the cannabis market, what's been going on, let's say, in the last 6 months, and then also all of 2019.
Yes, so in June, things still look pretty good. These stocks had not been crushed, but they were heading down. Since then, they've definitely taken a turn downward. I would say we may have seen the bottom a couple weeks ago in many of the stocks, and there's been a lot of disappointment with respect to earnings. However, I think that we're starting to see the groundwork laid for a much better 2020 when a lot of the U.S. MSOs have new stores coming online that will very likely be cash flow generating assets. And up in Canada, with a lot of the LPs, we're starting to see where there's the rollout of Cannabis 2.0, which refers to edibles, drinks, vapes, etc., which they were not legally able to roll out until, I believe, the November timeframe. So we'll start to see those hit the shelves likely later this month, and I think that will really set the stage for a more positive 2020. However, I would also add in 2020, it's really going to be the year, I think, where we see the haves and have-nots. There's going to be companies that have the cash to get through this cycle of getting to profitability and cash flow, and those companies will survive. I think there's plenty of companies that won't, but we'll probably see a big wave of mergers and acquisitions. There's some speculation on when that will be. Some are thinking it's early in the year. I believe some of the more sophisticated folks in the space are probably correct, and it's going to be probably starting in the summertime and really heading towards the end of the year when a lot of the companies appear to be running out of cash in, I would say, the Q2 time frame, and then realize, hey, we need to do something. And I think a lot of companies will be looking to partner up at that time.
So what would you say were some of the reasons for why, we saw from June down to, as you said a couple weeks ago, this just drop and real hit on all these cannabis stocks?
So, as most are probably familiar, there was a huge wave of companies coming public in 2018. Well, when you're coming public, you're always trying to paint a rosy picture about where you think this, high-growth industry is going. And a lot of companies put out projections and numbers that were not achievable. And when that came true over the last couple of quarters that were reported, the stocks started getting hit really badly. And a lot of it really came down to the margins that were so low, and it was clear that for every dollar of revenue being generated, companies were losing $1 or even more.
So what would you say is the way in which, because look, this has been one of those industries that has moved so fast, I'd say in the last especially 5 years. what are some of the things that they can do to make sure that they still continue to have the investors' trust? Because when things like this happen, our audience, a lot of them probably look at cannabis stocks. I hear it every day from people that might not be as sophisticated microcap investors as some of my other colleagues that I have out there. So what can be done to protect the investors' interests so that they're just not getting screwed by some of these deals that are out there?
Yeah, so it's a great question. I obviously know a lot of the companies and won't speak out of school, of course. However, what I can say is you see a lot of companies that have had pretty rapid rises as far as success in the marketplace with their brands and driving revenues and product notoriety. The issue has been a lot of companies do not have the financial and operational expertise to scale the business rapidly, and they end up tripping over themselves. And I can't tell you how many I see that with. So you're seeing the marketing and sales and branding expertise, but not matched up with the operational and financial controls that I believe are needed to really rapidly scale a company. There's a few that have all the pieces in place, and you are starting to see those companies outshine and separate themselves from the rest.
So, you're on the institutional side of things, so I'm going to assume that you are on more of the sophisticated side. I think we can both agree. So, but here's,
I won't challenge you on that.
Okay. So my question on that then is, what are some of the criteria then that you look for if you were to say, that's a deal that looks interesting to me?
One of the things I really like to see is companies that have something unique that's a differentiation in their product. What I've noticed lately with a couple companies I've been introduced to, gone to diligence, seen production facilities, and this is on both the THC side as well as the hemp CBD side, is nanotechnology as far as how products are put together, the emulsification process for CBD, tinctures, water soluble, what have you. These products are really able to deliver on a promise of rapid onset. And I believe that is allowing the consumer to recognize that they're feeling the effects of whatever it is that they've had within approximately 15 or 20 minutes. And then they say, wow, that was a nice experience, and that they want that to be repeatable, and they go back and they're repeat customers because they say, hey, that's a product that works. I know it worked. There was no question in my mind. So innovation in technology, I think, is very important. Another movement that I think is very interesting to see is with drinks. You're starting to see something that's going to be more synonymous with the experience that you have when having a cocktail. So you're seeing much lower dosing drinks that are coming out in the 1.5 to 3 milligrams per drink, where an average person could probably have 2 or 3 THC drinks and, still be in decent shape, just like if you were having 2 or 3 beers.
So another news item I wanted to ask you about, because this got a lot of coverage, is how there was this oversupply of cannabis in Canada, because, there's just such a drive to really have as much product on the market that might be needed or might not be needed. So, what's going to happen from there? I mean,
good question. So, yes, in the news we see lots of taglines about oversupply. Well, how do we define oversupply if the demand can't be met? What am I saying there? Demand can't be met. There's nowhere to purchase the product. So part of the problem in Canada has been there's very few places to actually purchase the product. And in Cannabis 1.0, you were able to buy flower and gel caps. Not that interesting to people. People like gummies and different candies and chocolates and drinks, tinctures, a lot of other things, delivery methods, if you will, that are more synonymous with a standard CPG type product. Cannabis 2.0 allows for those products to be rolled out. That also includes vapes, obviously a controversial area right now, but a very efficient delivery method for cannabis. And I think that that's really going to drive a lot of sales as well. But again, back to just finishing up, when it comes to this oversupply, there was so few places to sell. I think there was plenty of consumer demand. I hear people were lining up at the stores up in Canada. Haven't witnessed it myself, but yeah, there was very few places to actually make the purchases.
And I also have to ask, we have a big election coming up next year, presidential election 2020. How could this race affect some of the initiatives that are going on in the cannabis industry?
Great question. So a lot of people I think are very smart in the industry have been talking about this in relation to the election cycle for the last year and a half. I think the best point of view is in the summer, Trump does something to take ownership of this cannabis legalization. We don't exactly know what it's going to be. Maybe it's just descheduling from Schedule 1 to something else. But we believe he will take ownership and do something where he says, I made it legal, or I did this, that's great for cannabis. That's going to help him get some votes that are on the periphery, and I believe he will look at that as a way to win needed votes to win the election.
And what would you say are some other catalysts that investors should look out for in 2020?
I would be looking for the best and brightest and well-capitalized companies that are building real brands and getting into multiple markets in the U.S. And those markets, which I really think are going to be driving, obviously California is very important, Colorado is important, Michigan and Illinois coming on, Massachusetts is a critical market. Be very interesting to see what happens with votes in New York and New Jersey. Those will be massive markets coming online. Obviously votes need to take place, but people are looking out to 2022 is the years that those may come online. I think those will be big drivers.
And where can our audience go and find more information about you and Benchmark?
You can go to benchmarkcompany.com.
My name is Robert Kraft, and I'm your host on SNN.Network, and we're at Benchmark's 8th Annual Discovery Conference 2019 in New York City. With me again has been David Lachtman from Benchmark. He's a managing director here. David, thank you again for joining me today.
Thanks for having me.